Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, June 18th. It's around 3:38 Eastern Time on Tuesday, so a little before the market's closed. I've actually got to take off right after the market closes, so I wanted to just do a video right now. I wanted to talk about what we call a confluence trade or a confluence situation. It's one of the first trading ideas that we teach and we talk about, and today was kind of a perfect example of that. And so I want to show you what I'm talking about, and the example actually took place right in this area here for a long trade. But I want to talk a little bit more in depth about how that came to be and talk about it kind of part by part. Now, I've got the chart kind of scrunched up here to show basically the whole day here, so it's a little a little harder to see than if you had a little spaced out, but you'll probably be able to follow no problem. So what we like to do is look at various pieces of evidence and not just look at them in terms of technical indicators, but actually look at real-time order flow based, market data based evidence. Okay, and so we look at several pieces. We look at our bigger picture bias and bigger picture key levels. Then we also have these real-time pieces of evidence, relative aggression and high velocity moves. I talked about those in yesterday's video. If you didn't see that, it might be worth clicking the link below to check that out. We also talk about this real-time support resistance zones and deceleration and divergences, and then the directional filter as well. And the idea of confluence is it's basically, you've got several pieces of the puzzle. These are all basically pieces of the puzzle, if you will. And when a lot of those come together, just like if you were doing a puzzle on your table, the more of those pieces that come together, the clearer your image of what's going on is, or the clearer the idea of what you see. So within the market, it's the same idea. If you have the patience and the discipline to wait for several of these pieces of the puzzle or pieces of evidence to line up, then you have a very high edge, high probability type of a situation. So with that said, let's start out with the idea of the bigger picture bias and bigger picture key levels. And so every day in our member center, we do a report that's pretty thorough in a video in our member center, and we talk about bigger picture bias and bigger picture key levels. And so heading into today, our bigger picture bias was up. So all things equal, we'd rather be on the long side if we can. And then some of the bigger picture levels that we wanted to monitor, see how the market would do, down below at 25.50. Then we had one at 39.50 that could act as potential resistance, and if we get above it, should act as support. Same thing with one at 41.50 there, and then also another level up at 47.25, which is basically where the market's topped out today so far. So those are just kind of levels. They're not something you necessarily just want to trade off blindly, but you want to kind of monitor. If you think about it in terms of like steps on a ladder, the market, once it gets to one level, say higher, it's probably going to test it. If we can pierce right through it, it's probably going to go test the next one. So that's basically what happened today, where you can see we opened up and had this level 3 aggression bar. The low of it got tested, but essentially held and had full bars above it. We tested into this 39.50 area and decelerated. Then we pierced through it on some pretty strong buying aggression, level 2. So the expectation would be that we would test this next level higher. We kind of bounced around there for a half an hour and then shot higher again on this level 3 strong aggression. And so that's where I wanted to talk about this idea of confluence as well, because if we go back to our image here, we've got these relative aggression bars that I was talking about, the level 3 bar here that is showing extreme buying aggression that's coming into the market. Same there. Now we tend to, or we know, that generally speaking, the low of a level 3 bar should act as pretty good support, especially if it's within the context of a bigger picture up auction like we have here today. We've also got the directional filter here, which is strongly bullish. We've got this green area, which is showing that all things equal, that's a pretty good area of support, just like it is up here. Okay, and we've also got the market trading above this 41.50 level. So basically, everything is in our favor. If we look at what we have here, again, we've got relative aggression bars showing us that buyers are in control. We don't have any high velocity moves. We've got a support zone showing us that it's a good place to be a buyer. You can wait for confirmation of divergence or deceleration as well. We've got the filter that is bullish. Our bigger picture bias is bullish, and we have an area of bigger picture support. Okay, so again, if we look at this and we break this down, right in this area right here, again, filter's green, bigger picture bias is up. Here's a support zone, this green box right here. This 41.50 area, this blue line, is an area that we would expect to be support once we get above it. So everything's really lining up to take a long trade right in here, especially when you consider the fact that this relative aggression bar, this level 3 extreme, is showing us there's extreme buying aggression right there, and we know that the low of that quote should hold. It's going to hold 75-80% of the time, and when so we know that's a very good trade location as well, right at the base of those. And you've obviously, if you've seen these videos before, you know that's what we talk about a lot. So all things equal, this is showing us it's a very, very high probability place to be getting into a trade. Now, certainly if you wanted to wait for a deceleration, you could wait for this bar here where we get the deceleration for even more confirmation. But certainly in my opinion, we have a lot of things, we've got about 5 pieces of evidence all lining up right there. Does that mean it's going to work every single time? Of course not. It's not. But it is a very, very high probability trade. And what you've got is a situation there where you don't have to risk much. You can place your stop just a little bit under this green support zone, so you only would have to risk a point and a half, 2 points, depending on how wide you like to keep your stop. And you've got a pretty nice opportunity to at least go test this potential area of resistance here, and then this next area at 47.25. You have pretty good odds. So you're giving up a point and a half, 2 points to potentially make 5 or 6. That's kind of the idea there, where again, these don't happen all the time. You have to be patient for these confluence type setups. But again, a lot of things were lining up in terms of bigger picture bias is up, our filter is bullish. We want to be on the long side. Okay, so that's the first thing. We know we don't want to be on the short side. We know we do want to be on the long side. So then we ask ourselves, how can we get into a low risk, high opportunity type of a setup? Well, certainly we know that the low of this level 3 bar should act as support. We know that this is a support zone. We know this 41.50 area should act as bigger picture support. A lot of things, again, coming together, or what we call confluence, right in this area right here. So hopefully that makes sense. That's kind of a textbook confluence opportunity. Here's another situation here where you've got the green support zone, green filter, bigger picture bias is up. You got another level 2 bar. The low of that should act as pretty good support, especially when it's making new highs there. The only caveat is that it's in this area of potential bigger picture resistance. Now, you've certainly got more evidence for than against. So, getting long there, we rallied about 3 points in total from there. So it's not the worst. It's just not everything lining up perfectly like it was right there. Okay, hopefully that makes sense. If you have any questions about that, let us know. But that is kind of a textbook, what we call confluence trade, where a lot of pieces of evidence come together. All right, let us know. And by the way, this is a ES chart, E-mini S&P 1 minute. You can use this on basically any market, any time frame. So it's just I tend to look at the ES on a 1 minute. So anyway, that's that, and we'll talk soon. Let us know if you have any questions.